Hello, ladies and gentlemen, you're welcome. I quickly want to just give you basic, trading strategy that I know that is highly profitable. It look old, primitive, you know, boring, but I think it's worthwhile. If you want to know more detail about how this strategy works, you probably want to come into uh, my training section or paid training platform. So the conditions for you to access that, number one, is either you register with us. You register with us on Aka's X platform, which is if you do yearly subscription of Aka's X platform of $999. Now, we give you access to so many things, academy training, scanners, and all the like. Then you will be able to have access to even live mentorship from Aka's X. That's amazing. And then you have access to 200,000 trading for that. Makes a lot of sense to me. And then I think everyone needs that. Then if you access that, if you subscribe for yearly subscription of Aka's X, you have access to this training free. Now I'm going to show us this strategy, but more detail on it, you want to know more detail on how to actually implement it properly, then you need to do it. That's first thing. Second, you subscribe for register on my link with Capital Extend on the comment section. Fund your account with minimum of $1,000. Fund your account with a minimum of $1,000. Don't pay me a minimum of $1,000. Then you have access to this training, full training segment of this, support and substance strategy and all that. Then other strategy that I combine and conferences I use to fantastically effective. You don't even need signal for anybody if you learn it. Then you have access to my 1 year free signal. 1 year free signal. So my 1 year signal for us is $600, monthly is $75 ordinarily. But when you come in, you fund your account with $1,000 minimum. You have access to my signal for 1 year. You have access to the training. The training costs $500, but it's free for you. You're going to learn so many things. Then you see I have access to signal, like I've said, and then all that. If you don't want to go access detailed training on that, just want to have access to my signal, right? For the 1 month signal, like you want to sign up on Capital Extend and fund your account with $200, then you have access to my free signal for 1 month. Then if in 1 month you are not profitable, you can exit. You can even withdraw money from the broker. Then if you subscribe for monthly subscription of Aka's X, I will want to see you through till you pass your challenge account of $10,000, which Aka's is going to give to you free. And then that may just give you access to 3 month signals on my platform, but not to the training. Of course, in Aka's, you have access to the training for that 1 month and your training. Signal Forum will give you access to Signal for 3 months for you to pass your challenge account. After that, it's either you subscribe for yearly access subscription and then give you access to full training, or you fund your account with $1,000. Basic, you get it? Now, so let's go into the system. So it's very, very easy, but just quite unfortunate that level of discipline is low, and that's what we're not doing. So now let's go into the action. Somebody say action. So let's go into the action, and then you see. So like this video and make sure you subscribe to this channel. It's a fresh channel. I'm sure you're the first person that's going to watch our training section of this channel. All right, so welcome to Cash Flow Solution. All right, so let's go into the charting, and then want to learn more about how to set up your chart. All right, you want to learn how to set up your chart or trading view, then definitely you will want to come to Plan B. And so I probably will not have so much time to start that, but I need to do basic for you. This strategy is very powerful. Now, this trading view you need, if you go to the comment section of this report, you are going to have a link there on the trading view. Register is free, you are not charged. So if you want to now subscribe for basic or advanced expert training and all of that, so, but for me, I don't think you need it. Even with this strategy, you don't need it. Okay, so let's quickly look at it. This place you are looking at is called watch list. I'm going to remove all of these jargon away from this watch list. So look at me the way I remove them. All of these things I'm going to remove them, so see them. I only leave these indices, which is called DXY. I'm going to leave that. So now stock, I'm going to remove all of this so I don't have time for watching. Then later when I have time, I can set it. All right, so gold, of course, I trade gold and all of that. I'm going to remove silver. All right. Now if you come down, so Euro USD, yes, GBP USD, these three instruments, they are good for you. Don't remove them. Of course, crypto, right? So crypto, Bitcoin, Ethereum, Solana, Chainlink, and Avax, Binance Chain, that is then SUI. I'm going to leave this one. So, but we're talking of trade in general, not only on Forex, but I'm going to be particular more on Forex because those of you are going to be on my platform. So now let's go. I'm going to do something very important. Now, I trade gold mostly, right? I trade gold mostly. And so here we're going to have this very, very simple. Just a moment that I need to set up for us. Give me a moment, ladies and gentlemen. So let's go quickly. So we're going to trading. And you see, I just mark all of these things. So let me take them off in this my strategy. I'm going to take you through basics routine of what you're supposed to be doing trading on a daily basis as a day trader. So I'm not going to detail of what is trading and all this day trading, swing trader, and all of that. So I'm not going to that. So I'm going to remove all of those things you're seeing on my screen. Okay. So let me remove all of this. Good. So now, even though I have one line still joined out, no problem. So let's just go and write on. So let's quickly look at it. So let me use gold. So we have other instrument that you probably can use, but I'm going to use gold as an experiment for this training. Okay, I'll use gold and GBP to do this experiment. So let's start from gold. Ordinarily, so if you trade more instrument, like I trade NAS 100 US 30. So you just to click on this plus sign and I go for NAS 100. So you can see NAS 100, that is US Tech 100. So US Tech 100. So put it NAS. I'll just click on this plus sign. Then I use US 30, US 30, US 30. So this is indices. So I go to US 30, so that's Dow Jones and all of that. So add Dow Jones and all this. Now these three instruments are my major instrument and crypto for forex trading. Right? So let's go to take, so just to push it up into the arrangement of my trading. So you can just carry and drag. Okay. I drop, so I carry it again. So I want to go to where I will be needing it. Okay, so it's under gold. So I take US 30. There's US 30. So just to squeeze, try to squeeze. Yeah, you won't drop it. Okay. See the way I'm moving it? Okay. It's okay, okay. It's okay. So US 30. That's not the move. Sometimes you can move it gradually because if it's going to give us so much stress. Remember, this is not what I'm coming here to do. Okay, so US 30. All right, so I've just arranged my stuff. So we're picking gold, right? So now this is gold. Just a moment. Right, so now let's go gold. I will have entered long again. So let's see. Now, you, on a good day, you are a day trader. On a good day, you are a day trader. So now, and I will always advise most of my traders, I say, pick an instrument that you are going to trade. Don't jumping around too many instruments. So we're picking gold. Now, you as a beginner, pick gold. Don't go to US 13 as 100. So pick gold, UJ, that is USD JPY, Euro USD, and GBP USD. So look at the instrument you need to trade. Gold, maybe because of that, you can add gold here. Euro USD, GBP USD, USD JPY, and gold. These three things, these four things are okay for you. Now let's go. Very simple. Now we are going to trade. But the first thing is that I will have go more detail of top-down analysis. No, you are going to mark what is called key level so that you can trade your support and resistance. Now, to do this, first of all, you need to go into your daily time frame. I normally want to ascertain what really happened on the day. Are you getting it now? What really happens on the day? So I want to see the candle pattern. It helps me to have, to an extent, certain level of bias. And I'll tell you what I check, what happened on the day. So what happened on the day? Forget these two mark I mark. I'm only marking because I'm foreseeing double top over here. How do you actually see double top over here? If I use a line chart, you're going to see that this like a double top over here. So now forget about that. So let's go straight to what brought us here now. Now I've come in a day and I see that the previous candle actually was bearish. The next one was bearish. This is supposed to be bearish. But what happened? The candle opened. All right. See this candle open. I'm now going to detail candle anatomy. I'm not supposed to go here. Now, straight, and let's look at the candle actually opened and first took out the previous day low. So that means it's a potential bullish candle for the day. Are you getting that? So things change around because depending on the time you come in. Now, let's say I come in the London section. So coming in on the London section, and as you look at it, this was the close of the previous day candle. I can mark it out like this. Can you see now? So this was the close of the previous day candle. I'm not saying you should do it, I'm just showing you. Now, this was the low of the previous day candle, so I can just take this my line. Right? I'm not saying you should do it, but I often check it. I don't need to do this to see it. I already saw it now. Look at it. So that means I'm biased, say today should be bullish for me. Are you getting it that? I'm biased that today should be bullish for me. That doesn't mean the market cannot return. Now, but to an extent, when I come in the morning, today should be bullish for me because the market opened, because I say market moved by CED, contraction, expansion, and delivery. Contraction, expansion, and delivery. That is indecision, deception, and then action. Indecision, deception, action. So indecision that market just in the dialing will give it, at least even if it's moving, but it's creating a range, right? If it's creating a range, that's an indecision. You're still looking, where are you going? Are you going up or down? And all of a sudden, you come down. That is, it deceive you. Like, when you're playing football, many of us, if you either you are in Nigeria or not, you know about JJ Okocha, Ronaldo, and all of that, who then those leg over. You first put leg left, and then you thought it's going left. And all of a sudden, you now take ball to the right. You sell the goalkeeper. Makes sense. And as a football in trading, I really want to simplify this concept for you. So, yeah, and then the guy go over here, stuff like that. So this is the thing. So if that happened, and that was what happened, it dribbled us down. Everybody say, yeah, it's crashing. Then look at a week. This week is good enough for me. Then to an extent, buyer say, okay, we should be bullish today. We should be bullish today. But that's not enough. Now, you as a day trader, is very simple. You're going to go to 1 hour. Sometimes, so that I will not complicate this concept. You want to learn hybrid of this concept, then you need to contact me, come to our platform to come and learn what do I call it? The full concept of this strategy. Now, so let's go. So what you need to do is that the simple thing you need to do, so you can go to your dashboard, right click, all right, so that you can have what we call session break. Okay, so you are going to have what is called session break. So I want to right click and click on settings and then look for event, depending on your own system, look at my own, and then this is session break. I add it. Now, what this session break does for me is for me to see where was the highest yesterday and where was the lowest. Now, so that's the first point you are going to mark. So you are going to take your trend line and mark yesterday high, which is here. Are you seeing it now? Very simple. So you can see you do this before mark you actually start trading. Maybe if you want to trade London session, or when you just wake up, you know you are a day trader, so you are going to mark it to serve you for the day. You can even continue for the following day, depending on how you are marking it. Now, the next, I want to mark yesterday low. And so yesterday low is already simple for me. Okay, so like I was saying, so here you can now go like just double click on this line, right? Just double tap on this line. As you double tap on it, go to text and then enable the text and type PDH, previous day high, right? And then you can say you should go to the right corner so that it won't disturb your chart. You now add it. Okay? So this one now, you know, we already marked this one. So this one can now form that. Okay? So this can form that, right? So we now see PDN, previous day low. You see it now? So, right? So, okay, I think we need to put it to the right. So, first at the center. So, here we go to the right and click OK. Are you getting it? Now, so let's reduce this one. You know, it was a line I edged together to just show you. Okay, so I'm going to reduce the line. Sometimes if you want to make it thicker, you want to make it thicker. So let's go. Just extend it to the day itself. So to make you to know that this is obvious, right? If it's not straight, it will be blurred. Okay, so I probably can just increase the font to 2, right? Or even 3 to just make it obvious, okay? Just to make it obvious. So you can increase the thickness to 3 to make that place obvious. So this was previous day low and previous day high. Then you could see other external liquidity around that. But what you are doing, I say what matters in trading is price action, volume, liquidity concept, and discipline. So we want to know detail about this, talk more deeper. So that will not distract ourselves so much. So now I'm going to go pick the line because there was the day before that previous day, there was an obvious point. This is a pivot point. So I'm going to mark it. But this time around, I may have to, may have to use my, okay. So I have to reduce it to one that it was, and then I clone it. And then do I see another pivot point? So which other pivot point can I see? Obviously, I have to mark this one out. See this one's here. So this one, they actually now create a cover for both. Now, these are my alignment, a support, and a resistance. This is a place the market actually got rejected previous day, right? And continue down. That's a pivot point. Another pivot point that you're going to find is actually here. Now, you do your own assignment. You are just trying to mark on 1 hour, which is the external region or higher time frame for 5 minutes. So let's look at this. Look at this. This is obvious, right? Now I drop it here. This is a point. Sometimes you may make it to be a zone because of the week. So if I extend it out to see that creating an event, okay? So we've gotten all of this. You can always adjust it at a lower time frame to make it powerful and accurate. All right, so now this is, we need to adjust it down a bit, even though it's a region, a zone, however, because from the week of this, that's how it's supposed to be. So I won't go too much advance of that. Okay, so that is good here. Now, we have marked all these major key levels. You have reduced your stress of jumping around, going to far places for your trading. Now, you have marked up this point. And let's go to 5 minute time frame where you want to take action. So let's go to 5 minute action. So good. Now, this we are in 5 minutes. So ordinarily, if you have come earlier in the morning, and because that's why sometimes I train ACL section to reduce stress for me, it gives me money before people wake up. Yes, it gives me money before people actually what? Jump out of their bed. Okay, so let's go. Okay. So now, if that is the case, are you going to give me money when people jump out? Yes. So imagine if you had come and you marked the previous day low. When you swing the previous day low, it's an indication that the market will to go up. All I wait for is to get confirmation. And I'm going to give you just few confirmation. Remember, I said, if you want to learn detail of this, you have to come into my training program where you get full training and understand how to go about all of this. Let's go. Now, to support your trading, you can see this is a very neat chart. You have gotten this. Ordinarily, maybe when you come in the morning, you mark all of this like a double top, which sold out. You got this from sell down, and then the market got here. Now, there's something you now need to know. I say there are 4 things that are very important in trading. This thing is getting longer. I think I'm teaching many things at a time. No. Let's go. Let's go. There is no time. But take note of this. 4 things matters in trading. One, price action. Which price actions? Majorly candle, candlestick, hit candlestick, market structure, MS, and then S and R, support and resistance. Two, okay, two, volume. You hear me right? What do I call it? Volume. Three, liquidity concept. Liquidity what? Concept. Four, discipline. So there are more things embedded in all of these things I'm optimizing. So these are the 4 things that are very crucial in your trading. And so now we have done all of this. So that means this guy, when you return here, now you want to find a sell because this is a rejection. Support and resistance is what you want to trade. So the market grammar column, this is a killer. Market got here, instead of going up, and then got a bearish candle. And then you are wait, even if I want to short from here, targeting this down here, that means I will take my ruler, and say to short because you already got some of the comfy. Some of us may not wait. Some of us may wait for a retest. So now, because you want a rally and a retest. Now, whichever way, your stop loss is above this uh, tentative support and resistance, and then 1:2. Look at 1:2. 1:2 is already somewhere here. Now, 1:2 around that point is your 1:2 risk reward. Something here. Because you have gotten this, let's look at it. That's you want to lose like 90 pips to make 190 pips. You know, this is gold. Now, the market reversed down here. Don't be afraid. But you have made your decision, stand by your decision. Don't deny. Now, most conservative traders wait like this. When they wait, when the market tests, is when they are now going to sell. That means you will now see them they do this. Because this is a potential stop limit. Now, so what they do is to mark this point and say, when market return, this is 5 minutes. When market return to this point, perhaps fail, and I'm sure you have been tempted to enter here. So whichever way your stop loss are both here, let the market do what it's going to do. And then move the market rally back up, and then we have to sell. But the fact that they sold down here does not mean that it came over. You only target your own expected return, grab the money, wait again, and go back. Check the market. What are you going to do? Now, you see that this was yesterday low. It's a liquidity area, and which is one of the strongest liquidity area. The market aggressively returned here. Wait for the market, and then you see the market, another secret I'm giving to us. Even before this market rally, the sniper entry that these scalpers, if you meet scalpers, ladies and gentlemen, if you meet scalpers, they are aggressive people. They call them sniper entry trader. See the entry this person is going to enter here. The market is targeting here. When they created wick here, you see it will mark this point and allow the market to return back to that and bounce. It didn't bounce, no problem. It creates another long candle. He will mark this. This is support. I'm just teaching you pure support and resistance with price action. Now the market came here. Now you can see that this may be difficult for you if you are jumping around too many instruments. So you have to learn how to stay. Now the market actually came down here as a potential kind of support, and you move up and return and fail not to break below it. Look at the engulfing candle. Now, you don't even need to wait for any confirmation because this engulfing candle already tell you that this market is going up. Now, as a sniper entry trader, sometimes let me not complicate it. But if I go further, I will complicate it. Let me just stop it at 5 minutes. But if I did stop it at 5 minutes, you will be confused. I will now be teaching you another strategy. So because an engulfing candle has come, or maybe it can be a week and all of that, the close of this engulfing candle is your entry. That means your entry was here, and your stop loss is still below here. That's 170 pips. And then you are targeting this previous place. And then before you get there, you may be up to that your 1:2. Funny enough, is that point that make your 1:2. So that means losing 170 pips to gain 350 pips. You see, now, so this is a day trading. Now, for people who trade good so much regularly, can I tell you something? They don't even target those plenty pips who are targeting. They look for 60 pips and all of that. That's why they go for 1 minute. So, but I'm not going to teach you that because now market accelerate and give it this. Now, this is the issue again. The market has now moved up, and then look at what happened again. The market, you know, you mark it. The market grabs this liquidity and want to sell that. Well, you have this support, and you have that this market has created a low, a high, a low, a high that broke this and a low. Presence of one low, second low, one high, second high, it's an indication of a strong uptrend building up. Right, market structure. It's an indication of market uptrend building up. So with that, on your 5 minute time frame, this is a potential strong uptrend. It's just that market is still struggling within this range because of the support and resistance region for the previous time. So for you that have a trade here, you are trailing. You are trailing. Now, another thing as the market is dividing here, when the market pull back, you want to look for a buy. So let's say ordinarily market pull back here, you want to look for a buy. So your buy will be here, right? Your buy will be here. When this guy come down to this point now, right? So your stop loss will be below this, which is here, and then that's about 110 pips. You can target here or still do your 1:2. If you target here, that is ratio 3 point something, that's about losing 110 pips to make how many pips? 110 pips to make 300 pips, right? So that is how you trade support and resistance. Now, what additional tools can you have to guide your trade or your decision? So that's where you can now use indicator. You don't depend on indicator to trade. You depend more on price action, which is the market structure, the candle pattern, and of course, even the chart pattern, and then the support and resistance. So now let's go. You can go ahead and add two instruments: momentum instrument and a trend instrument. And so momentum instrument, you can either add MACD or RSI. So let's first add MACD. You can make a choice of the one you love to use, right? Not MACD cross. For moving average, you can put it in your favorite. Moving average convergence divergence. Moving average convergence divergence. So if that is gotten, very simple, right? If that is gotten, then you add EMA. So EMA, that is moving average exponential. So you can put it in favorite. So every time you're coming, you punch it, to just come up. Now, because your account on TradingView is not a paid one, you can only use two of these instruments. Okay. So, but if it's a paid one, you can use more than that. You don't need more than two. Now let's go. So you go and click on the moving average, click on the setting, take your mouse to navigate through and see settings. Then you come back to the input and remove this line and type 50. You hear me right? Type what? 50. Then you come back to style, you can remove all of this. And then click on OK. You can see that it's just helping you to say when you are still not trend, though not too strong because the market is refusing because there are no follow. Now, this next thing you're going to do, you go to your MACD. Look at your MACD. You can do reset, but you can use it like this. It will be a lot simpler. Now, MACD is telling you another thing. There is a potential bearish divergence on MACD. How? Because of no follow. Because MACD is already pointing that then this guy does not have enough volume. Maybe that would serve as a preference for your MACD usage. MACD is not only to say, I see MACD cross or MACD this. So look at it. As I drew this line, it showed us that market was here and then creating a lower low, but the price action is creating a higher high. So, but this I can say is lack of volume in the market for good because this is your histogram. Now, quickly, I may want to explain what MACD is. It's going to take too much of my time. It's just to support you when they are in alignment and all of that. So, but your moving average is still showing that you are still not there. Your volume is lacking and all of that. But the thing I only explain to you about this is be careful the way you use MACD. MACD has about 4 components. Number one, it has what is called MACD line. Number two, it has what we call signal line. Number three, it has what we call histogram. Number four, it has what we call 0 line. Now, so now when MACD MACD line crosses above the signal line from down, it's pointing potential uptrend within that time frame, all right? Then, but you want to now confluence it with, as this MACD line crosses the signal line, are we having the histogram generating volume that will support that move? So if there are no volume generating, you have to be very careful. But in this case, there was volume. Now, the market saying, come down, and they have volume to support that. Yes, volume was coming, but now at this point, look at what is doing. You have it. Sometimes I avoid this type of trade that's not giving volume. And now, but it's still not trending the center. The MACD line and the signal line are together above the zero line, which is an uptrend. Okay? Is bullish or an uptrend because the MACD line and the signal line are both of them are still above the zero line. So which is still, so market can return back to this point in bounds. So you want to be careful the way so to let me short the market and then thinking that it's going to be crashing, the market will now come to the zero line and will adjust itself. So you have to understand, some of those exceptional cases. Are you getting it? So let's go now. Now, so MACD can come here and gather volume, then the market will shoot up. But you need to be aware of what you are doing at that time. So anybody who probably have entered from here will still be in profit. Putting my stop loss will be below the moving average. Are you seeing? And if I had entered here, my stop loss will still be below moving average. So that may serve as a preference of you using MACD. Then another instrument that is a momentum instrument you want to do is called the RSI. So let me quickly close this because you cannot use more than two indicators on your free account. Now let's click on it. Very quickly, I'm wrapping up this. So look at it, RSI, because I put them on favorite. Look at the RSI. What does RSI? It's still a momentum indicator. Now, if you go here, so you can do the setting of your RSI. Let's click on settings, right? Click on settings. I probably want to, there are things you want to do. I love to put this one in green. I love to see green color, right? So now the next I always do again is at the 70 level, I change it to line and I make it thicker. Look at it. I make it thicker. And again, I turn it to red, which is a danger. Okay. So then I come down to this one and I turn it to green, which is a green simple stop. So then we go here and then I change it to gray, right? And I turn it to line and of course make it thicker. And I say stop. All right. So the background again, I move over. Look at the RSI background feed. I don't want it. Excuse me, Mr. Man. Then take it off. Now, if you take it off, then you can remove all this label that is showing the front to make your job neat. But there's something here you may like, you may not like. It's called the RSI base uh, moving average. So I normally will change it to red if I was to use it. But so if that happens, I will now have to increase this one to be more bolder than the moving average. Okay, now let's get it. So look at what has happened. Sometimes you may want to make the center line, which is the the 50 line, to be a bit bolder. Can I see? Look at RSI to be showing a what? A bearish divergence. What do you mean by divergence? So now we create a high here. Instead of creating a higher high, we start creating a low and creating a kind of pattern. If you look at this pattern here, if you look at it, that means the momentum is plotted on. You see that? See the way the pattern is doing that. So I take this. If I take this from here, right? This was a low where the market actually started from. Okay, now can you see something? So even if you do like what do we call it? So for you can check chart pattern because so that I don't know. If you mark it from here, you discover that the market was not ready to actually go up. So the RS already told you, man, this is not beautiful, man. Number one, man, the market, the RSI, which is the RSI line, already crossed below the moving average, the RSI base moving average, like 50 moving average RSI base, which is an indication of Ola is not green. So if that's the case, you want to caution. So that means for you, your profit has been taken here. Taking trade here, you have to be careful and watch out. And that's what's in the RSI cross down. Now, what should I do? You either wait for this RSI to actually turn or return back to this base. Now, this guy is actually still producing upon that. No, I'm going up because we now create another candle pattern. But you know what? You want to be careful because it may be risky. Ladies and gentlemen, this is basically how to use support and start strategy. There's a trade I sent in my group this morning already. People are rocking it. Man, look at it, man, look at it, look at it, man. People are rocking this trade. They're in money. They're very, very big profit right now. You guys are rocking it. You guys are rocking it. Let's go. Now, sometimes you don't need your indicator to be shown, so you just come here, go to see, hide it, so that you don't get yourself confused. You need to see your chart very clear, then you can make clear decision. Right. So let's go here. Yeah, go to 1 hour. Remember, I said you first go to daily, and then just to print it as well. If it's going to be too advanced for you, don't bother go to daily. So just start from your 1 hour for your day trader or your scalper. Look at it. So daily self is confused, right? But oh, this is 1 hour. So, oh my God. You come in, look at beautiful trade, enjoy ride, and all of that. So let's go to daily. Look at yeah, we do even daily just created an equal high. Huh? Maybe sometimes maybe higher. So look at it. If I go to daily, look at this thing. High. To check, look at the high. I think the liquidity was swept. I think so. The liquidity was swept, right? So let's look at the. I'm not saying you should do this, just show you something. What you need to do is to induct your 1 hour because talk to that. All right, now let's go to our 1 hour. Of course, you see that what I call, man, what's going on? So I don't look at my daily candle. Are we, what's my bias? Or bearish, or this candle. For today. And sometimes, I don't like, sometimes when I'm teaching, I complicate my people. I want to go more for into explanation. And so I could be looking at this market today. So maybe now this will not even help you to mark yesterday high and low before I even go down to my 1 hour. How do I do that? Let's see this guy. This guy. Remember, I say I increase the thickness and I can clone it so that I can carry it to where it's. So I think this will reduce my stress. And what do I tell you to do? I say double click and say PD previous day low. Right here, double click PDH previous day high. Right. And let's go to 1 hour where you need to mark your potential support or resistance or external liquidity for your 5-minute trading session. Right, so look at it. So let's squeeze so that I can see it properly. If I look at it properly now, so are there areas that of interest that I need to mark now? The answer is yes. So you can actually see that the liquidity was swept. So look at it. Today, and so the market actually opened, first sweep the liquidity up. Then the next expected movement is to go and sweep any liquidity available at the moment. It may not be the previous day low because it's only when the market is finished. So here, we come back. So where on the pivot point? This is a region, so I'm going to mark this. Okay, look at this. Right, remember to change this, reduce it back to 1 thickness. I'm getting it now, right? So I can now just multiply it, or take it to any other area of importance. So which could be here. So sometimes when I have two places that are too close, right? So this one is too close, so let's keep it there. Then clone it again. So which area again? This area is very, very important. Can stretch it further to get to the previous. So many previouses. So let's extend it out. That's how it function. Previous. For life, can extend it there out. All right. So let's go. So now you are getting to a potential place that the market will bounce down. You see what we're doing now. All right. So I may not go too much on this because I've already explained it to you during the time of gold. So go to what? 5 minutes. Then we are in 5 minutes. Wow, good. You can see 5 minutes already reacting that I'm advanced here. Remember, you don't necessarily need to mark when you get to that point, but you're looking at. Okay? Remember, I told you, must I be in the market all through? The answer is no. Once you get what you are looking for, rest. Do other things. But if they present opportunity for you, grab it. Okay? Now, so let's go. So ordinarily, when you come to the market has created all of this, so you saw this, right? This was the previous day high. The market, all right, perhaps a new day, stretch a bit, do it chocolate. This is chocolate. This is chocolate, that is contraction. And then deception, which is expanded. And I'm going where I want to go. The market start rocking down, retested, and of course, we test another resistance. So where should be my entry ordinarily? So imagine when you catch this just in a day, you have seen the liquidity was swept, all right? Because this is a high from here. Excuse me. It was a low. Now the market, the moment I show the liquidity, most hyper traders have seen that the market has well liquidity. What do you expect? Market should be going down, right? And also what they do. And if you look at it, and I love this type of signal work very well. Add it to your memory. When you have a double top or a double bottom that combine the previous day and the new day, they are very strong. So look at this, the previous day high, and the market will sweep it and create a double top. You may not see it properly, If I click and go to line chart, you're able to see created a double top. And now, so probably this will be the neckline. So, but of course, you know what you're looking for. This is the previous high that created this high and this is a low. So market actually got and rejected at those points. So you can see marking those your point are very important. So for sniper entry traders have actually after this and then the liquidity sweep and we saw the first candle, the red neck candle, this is his entry. And then at the close of this candle is his entry and the stop loss. Because you want to reduce his stop loss, right? So if we want ratio 2, then sometimes I could target this support here. So that's about 1:3. So if it's 1:2, you have achieved your result here. 1:2. Let's go. If it's 1:2, your result is achieved here, which is about how many pips, guys? 60 pips to lose 30 pips. Gaining 60 pips to lose 30 pips. That's 29 point something pips to make this bid. So market hit and give you your profit. Oh, maybe you enter 2 or 3 positions. One to close and give you profit. Fantastic. You are looking at which next one, right? So this is now the market. This is a high, this is a low, and this is a high. So now this is a low. We broke this structure. A pullback must happen. Created another low. Is this one lower? I think this is it's lower. And created another high. All right. This is another low. This is another high. This is another low. This is another high. Another low is created now. All right. In 5 minutes, you're trading. So after a break of structure, you expect a pullback. Now, what you want now is this is a break of structure in a pullback. Now, market is no longer a pullback when it comes to grab this previous high that was left behind. Because this is swing low and this is swing high. And then another swing low. This is break of structure. Sorry, I'm not entering to more complex this thing, but I just need to show you. You know, I told you that I said 3 things in the price action that are very important for you. Candlestick, market structure, support, and resistance. So this is tend to be a resistance, this tend to be a support. This support is broken, then we want to test a pullback. After this pullback, this resistance should not be broken. So if this resistance is broken, that's a different game now. So that means this guy, as far as this guy is concerned, you have no call for alarm. You are still good selling. Now, so what you cannot do is, so what should I do? After a pullback, when now a continuation bearish candle like bearish engulfing or a week, a long week, and then continue, you now want to add to your position. So you are adding to your position here and put your stop loss above this point. Now, if the market continues to send, I want to break this now, you expect it to now, this support to either be activated, whatever. So here, your market now did margin. That's what magic your market will do here. You touch this point and reject, right? When you touch this point and reject, you will now pull back. If you pull back and didn't take out this low, so because this is another low now, right? This is a low. So now your market will do this for you. You come up and touch this, and now return back. Instead of coming to this low, you come and create another low here. So that means this is a low, and the new high, then another low. That means you have a higher low. Or this may come, you will break this. In breaking out to this, that is market structure shift or change of character. Because you could break this high now and then pull back. Instead of coming down here, you will bounce from somewhere. The next bounce, ladies and gentlemen, the new high created above this point is taken out. That will become low, right? A high, which is the new one, a low, and the next high that's created. Then market structure shift. That means forget about the continuation go down. Now, your support tool. Now, let's go to your support tool. You now have your 50 moving average. Now, you are still below your 50 moving average. So, as long as you are still below moving average, 50 moving average, you are bearish potentially. But you can now see when we talk about support and resistance, no indicator, price action, candlestick. They are very important. They are basic things you need to learn. The moment you are now more comfortable, you want to go more professional. Nobody stopped not to go professional, ladies and gentlemen. So imagine the new entry you enter here, you list a touch. The one you entered here probably will have given you profit or still in kind of drawdowns. Because if you look at it here, the one you entered here, all right? So your stop loss will definitely not go here. You don't go above this point. So that means if you look at it, so that you don't entertain fear while you are trading. You make decision. Okay. So this is a rejection. Look at this, a pin. That's a gravestone doji. So your stop loss is above here. This is a 1:2. Let's look at it. Your 1:2 is already done here. So just continue to start and making money. Continue to start and make money. So guys, can you see that the guy meant a journey? It's carried this way because this engulfing and another candle. So once, if I'm 5 minute time frame, market react and create. Okay, so markets react for me on my 5 minute time frame. So this is like a potential reversal for me as a sniper entry trader. Remember the chart I told you, I said like is the guy still want to like find a way up, right? But of course the similar thing repeated here. So that when the market have an engulfing candle, the first opposing candle and the second one come greener. That means at the close of this candle is my entry. It takes sniper entry traders or scalpers to do what I just want to show you, but don't complicate your entry. After you are following from the proper place and you're making your money. So the next you are supposed to be doing is to be trading your stop loss. But if you look at it now, for sniper entry trader, it's going to close maybe when the market hits here. So look at it from here to here to this 50 moving average. That's 18 pips. That's 18 pips. And now these people are going to use one lot size or 0.5. 0.5 is $5. $5 times 18, you know how much that is, right? So, but as long as this guy is still below this point, and as long as it's still below 50 million, so it can even sweep the liquidity, right? So markets come back, reject from the resistance or sweep the liquidity at the resistance and continue its own direction. That's exactly what has happened here. So now this guy is going to sweep the liquidity and then you see itself. So if you do not know what you are doing, you jump to the market and you are watching. The market actually travel. Say, I was in profit before, all of a sudden I'm now in negative. So that's what it is. The market get to the point to react and continue. So, but as long as it remains here, you are still bearish. Now, you go to your RSI, look at your RSI. The RSI is below 50 line, right? Which means it's still potential, though the market continues to create kind of double bottom here and then trying to react up at this point. So this reaction will now make you to pay attention that, okay, they have potential. That doesn't make you to jump in. Safely jumping in will have taken out this high, create another high, create a low, and have like one high, two high, one low, two low. Then it's going to make a lot of sense for you to jump. But for now, you can't jump in because the market can get to your here and then break this one. It continues to go down. After a while, will you be afraid? If you were early enough, you were just not doing random trading. You were early enough, not doing random trading. You still make profit and then watching them. So your profit can be reducing and adding, reducing and adding. All you do is to have trail your stop loss below here and then continue. So if eventually, and you are taking some profit, so if eventually the market return and hit your trailing stop loss, no problem. And even before hitting your trailing stop loss, you have found another entry because you know what you are doing. capital. Does that make sense? All right, so these are the two major examples I was going to do. If you want to learn more about this thing, reach out with me on my phone number +234 9047044998 +234 9047044998. This is very Smeda Switchmo. So cash flow, what we do is amazing. You want to do copy trading where you don't need to lift your finger. Meanwhile, you will make a lot of money. Contact us and then we'll sign up on Capital Extend. You don't give your money to us. You form your account by yourself and watch your money go. Yes, you hear me right? It's not magic. It's not Ponzi scheme. Not giving your money to any single soul. Put your money in your broker. Look at your money the way it is, and then just watch it go. Are you supposed to pay for this service? No. Once we pay, it is what we earn that a percentage is deriving from. But that because you want to join, come and pay to us, you don't pay anything to us for you to join. The only thing, you have to make use of our link, register with our link, and then enjoy free flow of cash. It's called Cash Flow Solution. Thank you very much. You have a nice time. Enjoy yourself. I hope you are good. So this is the basic thing. So a lot of things are happening in the space, but a good number of people are not paying attention to what is ideal, to have paid a lot of money. And so we just want people to learn and activate the right and ideal stuff. So my name again is Midas Timo. Until I come your way, you want to join our community, register on ACASX, pay your subscription, yearly subscription, and have access to our inner strategy in trading, and at the same time, training and free signals added to what we have to offer on ACASX. Then register on Capital Extend, enjoy our copy trading, and then it's going to be phenomenal. Staking, making money, diversify, and putting a cash flow. So you have a nice time and bye for now. Make sure you like this video and then the comment section, like the video, share to your friends, let them learn basic things that help them to make money and that. And then we all together, everyone winning.